who is the infrastructure provider and who is the product provider. And really the confusion and challenge and mistrust is purely from a regulatory point of view. There is a gray area of regulation. What can telecoms do and what can banks do in each other's space? That gray area is what really creates that mistrust.
Right. So let's try to answer some of those questions. Who is the provider?
Essentially, let's talk about telecom products. Telecoms are the providers of telecom products.
Right. You can't make a telephone
we
call.
Can't. Exactly. Banks are providers of financial services. But you notice that there is a universal product called payments. And when you talk about mobile payments, banks shouldn't have a preserve of the payment space, because fintechs are also in the payment space. Credit card companies are in the payment space. Money transfer companies are in that space. So it's all right and it's okay for telecoms to be in that space. The question that then arises is how you activate the payment on the basis of whose client and who is issuing the instructions and who is taking the underlying risk of the payments. Telecoms have simply replaced branches. Banking has ceased to be where you go to what you do on your phone.
Right.
That service can only be completed by a telecom. Telecoms had a head start. It took banks 9 years to convince central banks to allow mobile payments as a product, agency as an infrastructure, and consequently, what one would call the network effect crystallized. And of course, telecoms really, in one way or another, took not only the breakfast but the lunch of banks in form of transaction processing.
Thank God they didn't take your dinner as well.
That's where the banks have come back. If you look at, let's look at Kenya. The banks have come together and set up their own mobile switch. They are trying to reclaim the transactions that they lost to the telecoms.
Yeah, and how's that going?
It's an innovation. That's right. I think if you look at those who are familiar with Kenya know Equity Bank was the first to challenge that status quo, and we took a license of an MVNO. If you look at today, Equitel controls 26% of the national mobile payments, and 33% of e-payments. So essentially there is space, and if you look at today, again, the banks themselves are now are interoperable with all the telecoms and among themselves.
So this is swinging back the bank's way?
There's been a big swing.
Yes. And does it have a long way to go? Or
I think it may not have a very, very long way to go because the environment has dramatically changed. The telecoms had an advantage when it came to feature phones, because then the SIM card was the basis on what these mobile transactions were based on.
And what's the market penetration of smartphones?
I think today we have about 16 million smartphones in the country.
Yes.
So we still have a long way to go.
Right.
Given that we have a population of approximately 47.
Yeah.
So we still maybe have another 20 million feature phones.
And is that typical of the countries you operate in, or is Kenya a bit ahead?
Kenya is a little bit ahead.
Right.
But Uganda and Rwanda are catching up very fast.
So the trend is clear. So more people are going to have smartphones, and that's going to tilt the balance even further in the direction of banks. That's what you're saying.
Smartphones have become very affordable.
Yeah.
So essentially, it's just a question of time.
Okay. So that's the payments bit of it. Now, what about the services that you build on top of that? This is something that Equity Bank's interested in, I know.
Essentially, payments, if we look at it, payments can be compared with the rails of any other infrastructure. Payment rails are exactly like railway lines or airports or port in the sense that they facilitate all the other transactions.
So they're just a track?
They are just tracks.
Okay.
And essentially they facilitate exchange of goods and services. And essentially what we are seeing more and more is that we are moving from cash. We first of all came to plastic money. We then went to electronic money. We are now in the digital money. And essentially what all this has done is to reduce immensely the cost of dealing with transactions. It has also significantly increased efficiency within a company or a firm, within an ecosystem, and within an economy, and globally.